The UAE non-oil sector continues to be supported by various pro-growth government initiatives and economic stimulus plans. That's according to the latest Economic Insight Middle East report for the second quarter, produced by ICAEW and Oxford Economics. Mohamed Bardastani is their senior economist. He joins us here in the studio. Mohamed, let me start by asking you about the key findings of the latest report.
So the main finding of the report is that the Middle East economy will slow to almost a decade low in 2019, but there would be obvious cross-country variations. So the main reasons behind the slowdown is the deep recession in Iran due to US sanctions, and then as well as a slowdown in the Saudi economy because of renewed OPEC supply cuts. You have Iran and Saudi are the biggest Middle East economies, so obviously they will have outside impact on headline growth.
Now, in relation to the latest report, what can you tell us particularly about the UAE economy?
So latest central bank data show that the non-oil sector expanded by 1.6% year on year in the first quarter this year, the highest in 3 quarters, and higher than the average reading of 1.3% last year. So there are some signs of recovery. Confirming the story, the PMI survey, the Purchasing Manager Index, which measures the health of the non-oil private sector, recorded the highest quarterly average in the second quarter this year in more than 4 years. So we are seeing some positive signs of recovery in the economy. For the UAE as a whole, we see growth at 2.2% in 2019, so showing some acceleration from last year.
A lot of the GCC economies are obviously looking into diversification of their economies, particularly so here in the UAE. What kind of effect is that having?
So diversification doesn't happen overnight, and it takes time. So we are seeing some progress on that front, as evident again by the acceleration and more rapid expansion of the purchasing manager indices in both UAE and Saudi. We are seeing generally positive impact on the economy.
Now, what about the sectors that we should be looking out for in the second half of 2019?
So it varies from Dubai to Abu Dhabi. In Dubai, you would look at the traditional growth drivers, that is, wholesale and retail trade, tourism and construction. In Abu Dhabi, the international development in the oil market will be crucial as the Emirates economy remain highly dependent on oil.
What about oil? Because obviously that's normally the first question I ask you when we talk about this in your latest study. What is happening with the oil price, and where should it be in order for the economy to be doing well?
So I think overall we see oil prices averaging around $65 per barrel in 2019. For the GCC story, it's not excellent, but it's not that bad either. For the UAE, it's good enough, I would say, in terms of budget projections. But let's say for Saudi, Bahrain and Oman, it's not as good.
Great. Well, fantastic having you on the program again, Mohamed Bardastani. Many thanks.
It's a pleasure to be here.
A new study by Property Finder has found that high-end communities here in Dubai are seeing a revival in buyer interest. They say homes in areas like Palm Jumeirah, downtown Dubai and Emirates Hills have seen strong sales so far this year. Property Finder has registered 194